under a bit of pressure despite beating analysts' expectations on the top and bottom line. We're going to zoom out and take a look at the stock on a technical level to determine whether or not it's a good investment for your portfolio on the pullback that we've seen here. Joining me now, we've got our markets and data editor and host of Stocks in Translation, Jared Blickery. Jared, what is the technical analysis telling us?
Let us start with the definition. Technical analysis is a method of evaluating and forecasting future price movements of securities by analyzing historical price data and volume data. Now, this it relies on charts and other tools to identify patterns and trends that can indicate future behavior. And let's take a look at a chart I have here. This is Nvidia going back 2 years. You might be able to see these little green dots. Those are earnings announcements. And one of the things we've seen with Nvidia is that it can catalyze price up or down. And today it happens to be to the downside, but there were various times, and it's hard to see, but there were some times when it catalyzed price action movement to the upside. And in fact, before yesterday, the prior earnings reaction was a brief foray into new highs after being reversed. And then we saw this technical pattern here. So let me get to one of the forms of technical analysis, which is pattern recognition. I'm going to draw a trend line in here. This is still intact. And we also have a broadening megaphone. And this is a pattern where you see increased volatility and uncertainty. Bottom line is that we're seeing more indecision. Now I'm going to add another layer. This is a moving average. This is a 200-day moving average. And if I extended this chart to the left like 10, 20 years, you would see that the 200-day is a very good capturing device of the predominant trend. What you'll also notice here is we just broke below it, a little whoops moment in the recent past. And today we are bouncing off of it again. So suffice to say, Nvidia is at a decision point. So that was the 200-day. I'm also going to introduce the 5 DMA, and that's a 5-day moving average. We can use the 20, we can use the 50. The 5 I like. This is because of Brian Shannon. He wants to see price above it if he's going to initiate a long swing position that's holding for a few days, a few weeks, maybe in a few months. But that is something that we're not seeing today. So the long-term trend is up, the short-term trend is down, and so we need to make a decision. And guess what? RSI can help us do that. That is relative strength index. The squiggly line down here goes from 0 to 100, and then we have overbought and oversold areas, which is above 70 and below 30. What I notice here is that we have not been in an overbought or an oversold status since June of last year. This is no man's land. This is indecision land. So more heightened uncertainty, and that's what I'm getting from this chart. Now you put it all together, if I'm going to get long, I would want to see a cross over this 5-day moving average. That would bring it in line, the short-term trend in line with the longer-term trend. Ideally, though, I would like to see a little washout of the week longs, and so maybe we dip below the 200-day a little bit, and then we quickly reverse to the upside. That's a pretty strong buy signal right there. If we just get back to the record highs here and are able to extend beyond it, that's also a long signal, but then you have a wider stop, or it's more difficult for risk management at that point. So the bottom line is today we're kind of at a decision point below the 200-day moving average. If we close there for a few days, this rally is in serious jeopardy. Back to you.
Jared, thanks.
The performance of Nvidia in the fourth quarter of 2024 is no longer up for speculation by investors. We now know. Additionally, the news was favorable once more. Following Wednesday's market closing, Nvidia released its Q4 numbers. Not surprisingly, the GPU manufacturer easily outperformed Wall Street projections. However, should you purchase Nvidia stock following its impressive Q4 results? Nvidia announced $33 billion in Q4 sales, which was 12% more than the prior quarter's revenue and up 78% year over year. This outcome exceeded the $37.5 billion the business had previously projected. Additionally, it surpassed the $38.05 billion average expectation made by analysts LSEG polled. With Q4 adjusted earnings of $0.89 per share, the company reported a 71% year-over-year gain and a 10% rise over the third quarter of 2024. Adjusted earnings were predicted by consensus analysts to be $0.84 per share. Nvidia's data center business was its main story. Data center sales reached a record $35.6 billion, up 16% sequentially and 93% year over year. This accounted for about 91% of the business's overall earnings. However, there were a few positive aspects of Nvidia. The company's growth appears to be slowing down, which is a drawback of the Q4 numbers. In Q3 and Q2, Nvidia's revenue soared 94% and 122%, respectively, year over year. Additionally, the company's Q4 gross margins decreased 3% year-over-year to 73%. Why did Nvidia's share price slightly decline following its Q4 report, despite all of this positive news? The future is of greater importance to investors than the past. Although optimistic, Nvidia's outlook wasn't particularly noteworthy. For the first quarter of its fiscal year 2026, the company projected revenue of $43 billion, give or take 2%. This amount is less than the $43.37 billion average estimate made by the analyst LSEG polled. It also shows that Nvidia's growth rate has continued to decline. In the first quarter, Nvidia anticipates an adjusted gross margin of 71%, give or take 50 basis points. This maintains the company's gross margins decreasing trajectory from the previous quarters. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Jim Lebenthal, Nvidia falling below $3 trillion in market cap. It's down double-digit percentage points this week. You bought more. You've answered my question.
I did. So I bought more, 27 times forward earnings, a company that looks easily like it will grow earnings per share 50% this year. Look, we all know at some point that earnings growth rate is going to continue to drop off. But for right now, you put those two numbers together, it tells me it's a buy. I can't really explain why it was down 8%. If somebody's going to say it's the gross margin projections, fine. But that's something that I think is absolutely trivial when you've got a triple beat and a company that still is the leader in the semiconductor for AI space. So I am happily adding to it. I do want to make a qualification here. I hate making a qualification, but I've got to. The market is heavy, notwithstanding today's green tape. I mean, we can just look at the market action. It's been about 2 weeks, maybe a little less than that since we topped out. Maybe we're in a correction. I doubt we're going to get a full correction, but I think if we do, it's going to be like last August, which was over in a month.
We've gotten a correction
in the NASDAQ.
and more in the NASDAQ and, well, in the mega cap names.
Yeah.
I mean, Nvidia is off 21% from its record high of January the 7th. Alphabet's down 18% from its record high of February 4th. Microsoft down 16% from its high last July. Amazon, Meta, and Apple are all down significantly from their own record highs. You made a move too, Kev, in Nvidia today. Tell me more.
Well, yesterday at the close, Scott, we covered a quarter of the position just in case the things got a little bit more dicey today. And there was a lot of premium, as you can imagine, with the volatility. So we wrote a short-term 1 week call. It's a 123 option. We generated almost $5 of premium. So if I get taken out, I'm out at 128, and that would be great. Jim just bought it, and we still have the other 75% of the shares uncovered. But Scott, I'd be a buyer of any of these down here. Maybe not back the truck up and go all in, but if you're dollar cost averaging into positions that you really like, 10 to 20% pullbacks are the times you want to be buying.
Unless you think that the pullbacks are going to get potentially greater, Jenny. I mean, if you have a prolonged period of, if nothing else, concerns about a growth slowdown.
Normally, a company that achieves 65% revenue growth and gross margins of over 70% would excite investors. Expectations are naturally higher than those of many other firms, though, when a stock trades at over 31 times forecast earnings as Nvidia does. Nvidia's declining growth and worse margins shouldn't be a huge deal, in my opinion. No one should anticipate that the company's growth rate would continue to reach the dizzying heights observed following the initial success of generative AI. After the new Blackwell chips are fully launched, Nvidia's margins should recover into the mid-70s. During the Q4 earnings call, Nvidia CEO Jensen Huang stated that the processing power needed for AI inference is already 100 times higher than that necessary for early large language models, LLMs. He went on to say, "This is just the beginning." According to Huang, future AI models might require dozens or even millions of times as much processing power as current models. I think Huang will be shown to be correct. Additionally, I anticipate that Nvidia will continue to lead the AI chip industry. Growth investors should purchase Nvidia stock right away if these presumptions are accurate. The business may have many more successful quarters in the future. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So I think the quarter was pretty strong. I don't think any near-term gross margin pressure comes from pricing or from competitive threat. It comes from the natural manufacturing ramp of the Blackwell chip. And I would say that the guidance that they gave for 71% gross margin, which is still pretty impressive for any American company or any company anywhere, but it is down from 75%. I don't think that they could give us a confirmation that 71% in the April quarter, this quarter, was going to be the trough. So that's a little bit of a disappointment. But I think a lot of the action today is just more anxiety about the world of Trump tariffs. Overall, I think this company will, in the second half of this fiscal year, continue to reaccelerate sequential revenues, particularly in the data center business, which is 91% of their total revenue pie. And so I'm very confident.
So, Paul, just to put a button on it before we move on, the degree of selling we're seeing, NVIDIA hovering around losses of about 4% right now, you would attribute that to President Trump reaffirming those tariffs on Mexico and then adding an additional 10% tariff on China?
Yes, I think that is a factor that even when NVIDIA gave their guidance, couldn't incorporate, right? It's unfortunately, it's an unknown. But then the other worry, as I said, about NVIDIA is a fear that this quarter's gross margin at 71% will not be the trough. So I think those are the only flies in the ointment. One is geopolitical macro. I can't control that. I feel very good about the Blackwell ramp. And so I think it's going to be a trade today, mostly on the macro, that are going to take things to the downside. And it's essentially a risk-off trade today.
Nvidia is a company that provides full-stack computer infrastructure. As businesses spend more on artificial intelligence, it is the company that customers turn to when they need GPUs and semiconductors. This has greatly accelerated the chipmakers' growth. Nvidia's market valuation increased by over $2 trillion last year, to reach $3.28 trillion at the end of 2024, driven by strong demand for AI processors and growing interest in artificial intelligence. Compared to its market value by the end of 2023, this represented a rise of more than 170%. But on January 27th, amid worries about growing competition from China's DeepSeek, Nvidia's stock fell 17%, resulting in a loss of around $600 billion in market capitalization. Many investors who purchased the dip have benefited from the stock's near-complete recovery 4 weeks later. The South Korean government has revealed plans to purchase 10,000 high-performance GPUs this year in order to construct a national AI computer center, which is further good news for the business. The H100 and H200 GPUs from NVIDIA are among them. Additionally, as more Chinese companies use DeepSeek's AI models, demand for the company's H20 processors has increased. NVIDIA continues to have strong financial results. The business reported record fiscal 2025 full-year revenue of $130.5 billion on February 26th, up 114% from the previous year. Compared to a year ago, non-GAAP diluted EPS increased 130% to $2.99. NVIDIA should be listed among the top profitable stocks to purchase based on these astounding numbers alone. Additionally, investors are optimistic about the stock. In Q4 2024, 223 hedge funds owned stock in the firm, up from 193 at the end of the third quarter, according to database. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.